Thanks for joining us this morning. I'm Marlin Bohling with you, and we're going to go ahead and take a look at our markets in a second. I want to remind you, we had an overnight export sale, and let's bring those up here so you can review at home if you want. We had actually two. We had a sale of corn, and this time it went to Mexico. It didn't go to China, it went to Mexico. We had 150,000 tons that were sold over the weekend. And something also a little bit different this time around, it was for new crop for the 2023 and 24 marketing year. So I haven't seen that for a while. And soy oil sales of 20,000 tons. Now those were for the old crop marketing year, and they went to unknown destinations. My, oh my, we have had the markets being really jumpy here today. I want to start out today by going to the crude oil market. That's the one gathering all the headlines today. And in the West Texas Intermediate crude oil trade right now, we are still showing May $4.66 higher. We're at $80.34 per barrel after getting as high as $81.69. Still very, very, very strong today on news that OPEC says they want to cut back production later on this year by over 1 million barrels per day. Well, that got the market's attention. Let's see what the grain trade is doing, though. On the corn market, with our quotes provided by bar chart here, you have the May contract 7 higher at 667.5. It backed off just a penny from its earlier high a little bit ago, but that's all. You have December new crop corn 7 3/4 higher at 574.25, just one tick from its high of the day. Meanwhile, in the soybeans, wow, May up 18 3/4 at 1524.25, within a penny of our high of the day there. November new crop soybeans, they are 14 1/4 higher. Last trade now 1334, and that's only like one tick away from our daily high. Then you get to the wheat market, and they are full of enthusiasm today. In Chicago, May is up 12.5. 704 3/4 is our last trade there. July, 12.5 cents higher. Kansas City on the May, we're 19 1/4 higher at 897. It got as high as 902 and then backed off about a nickel from that point. You have July up 18 1/4 right now. On Minneapolis spring wheat, we have May 15.5 cents higher, and you have July gaining 14 3/4. July cotton today, 24 points higher at 83.34 per pound. New crop December just 7 points higher at 83.49. Well, we have the one and only Chris Swift with us in studio. He is with Swift Trading right here in Nashville. What a day to come in.
It is, isn't it?
Maybe we should have you come in every day.
I don't know about that. So some might disagree with that.
Markets are on a run today.
They are.
Crude oil taking off and flying high. We've got the grain markets all starting to follow along.
Yep.
What happened anyway? I mean, is there more to the oil story affecting the grains? Or
probably what? There's probably some underlying tones there to it, but really and truly, when you look at the oil aspect of it, that is probably the grains, because grains are partly energies now, and we know we've discussed earlier about the new soybean crushing plants that have come on, and they are primarily for the oil, for the diesel. Biodiesel fuel, and then corn with the ethanol. So all of that's probably energy related more than anything.
You and I were talking in the green room right before we came on live here about the fact that especially the corn market right now, just really getting overbought. Yeah. It was overbought before today.
Right.
And now look at it go today. Does the market care about that or not? I mean, what do they do with that?
I think it does care about it. It really does. And, of course, we've seen the increased sales, too, from China and now Mexico. So there is demand for the corn out there. I always remember that last year's corn crop was just a little bit short. So probably just keeps a firm tone on the market more than anything. And then maybe we get to use these higher prices to market some new crop.
Interesting. And it would be interesting, too, if we had a wet spring, right?
Oh, absolutely. Absolutely. Might push a little corn into beans or something.
Just saying. All right, we'll come back in a moment, and we'll take a look at our open on our livestock trade, see what's going on there on our last update coming up next. All right, we're back with you here on the Market Day Report, talking with this guy over here, Chris Swift of Swift Trading here in Nashville. Now we want to shift gears and go to the livestock trade. So let's go to the big board here and look at our live cattle. Currently, right up to the moment, we have April live cattle 25 lower. Chris, would you agree most of the action is in June?
Oh, primarily, yes.
Okay, so let's go with June, down $1 right now at 161.12. It's far weaker than all the other months. August is down 82 cents right now. Now on feeders, let's go over here. We have the April contract down $1.87. The May is down $1.65. On feeders, do you go with May or August?
Well, a little bit of both, because May is still very applicable right now.
Okay.
And August, the summer months.
So May down 172. 203.52. It's still pretty healthy. I mean, it's way over $200 yet. Yeah, about a week ago, it wasn't even at $200. Now, on lean hogs, you have April down 70 cents. And again, I think we'll probably jump out to the May. We have the May 22 lower at 84.40. I guess we are in April now already. I keep thinking we're still in March. June is down 42 at 91.20. So kind of weak in the knees here in the lean hogs. When you go back to the cattle market, lower across the board, but the cash cattle trade last week was surprisingly strong, wasn't it?
It was higher.
Overall, what'd you figure, $5 over the week before?
Yeah, and it seemed like that the Packers had been trying to play low ball. We don't really need your cattle, and then all of a sudden they come up at the end of the week and need some. And we've been kind of tossing about the aspect of demand from the consumer. And now we see this morning with a little bit higher fuel prices and a little bit higher grain prices and some of the other markets higher, you got to kind of wonder now, how does that impact the consumer? Because not only are they dealing with very high retail meat prices, now gasoline's going to be higher to them and a lot of other products.
So I keep hearing all these well-respected economists saying we haven't even seen anything in the recession yet. If that would be the case, boy, if they're right, what would that do to livestock trade?
It would probably get them a little bit lower, and I would tend to agree with that. The sheer amount of money, that $4.5 trillion that was set out 2 years ago, that money's still there. It's just in different people's hands now, but that money is still there. And when the buying power comes out, then I think we still have a lot of it left that people aren't real sure of. And then when you talk about more recession, the higher prices will just bring the recession that much quicker to us.
Wow. Makes me think of like a year or two ago when you had the meat shortage at the freezers.
Yep.
You think we'll see that again?
Probably not anytime soon. I think the way the slaughter process is right now, and still 11.5 to 11.7 million head on feed. We've carried that same number for 9 months now.
All righty. Well, our thanks to Chris Swift. Thank you for coming
Absolutely.
in. Chris Swift is with Swift Trading. He's based right here in Nashville. Good stuff. Tammy, back to you.